It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Wednesday evening, October the 12th, 2016. Boy, we have a bunch of trading ranges to work with tonight, which makes our job pretty simple going into Thursday's session. Crude oil is bearish and trading inside a range around that $50 a barrel level we talked about last night. The S&P and gold are both coming off the highs of their ranges and rotating back to those lows. And the euro is trying to break free of its range on the way down to a big round number of 10,000 tomorrow. We get some big news tomorrow, a great plan on the schedule, got another great newsletter in store for you guys and gals tonight, plenty of reliable opportunities setting up for a Thursday session. Before we jump into our charts, though, please don't forget, the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of the YouTube video. Follow that link. Come join me here on the blog for the full-length version of our nightly newsletter. And while you're here, don't forget, you can join our mailing list, and I'll send you an email every evening when our nightly newsletter goes live. You can download all the charts you see me using in tonight's video. Follow that link below the video tonight to download those charts, have them ready for your computer tomorrow. And of course, don't forget, in the upper right-hand corner, if you're not a member here at School of Trade, I got a free pass for you. Grab your free pass in the upper right-hand corner. Come out and join me as a guest in the trade room. And please don't forget, if you're brand new here to School of Trade, I got a great frequently asked questions page here on our blog. Answer all your questions there, and I'm always standing by to help you guys out every step of the way. Boy, it's been a great week so far. Monday was a holiday. We heard from OPEC on Monday. That shook everything up here. We got Yellen coming later on in the week. It's kind of a shortened holiday week here, and we've had a ton of opportunities here so far and some real big moves here. Got a schedule for tomorrow here. Tomorrow's Thursday, October the 13th. I don't think Thursday the 13th is unlucky. Hopefully it's not. So no Friday the 13th here this week. Tonight, though, coming out of China, we get the merchandise trade here tonight at 10 p.m. Eastern Time. That's, of course, Wednesday evening. So look for that news coming out tonight. If you're trading the Asian session or early part of the London session tomorrow, be aware we may see some lingering effects of that merchandise trade overnight. So if you're in Asia or Australia trading the overnight session, don't forget about the merchandise trade from our good friends in China. No major news tomorrow in the London session. Of course, London opens up at 3 a.m. and will go until 11:30 a.m. And then when we open up tomorrow morning in our live trade room, we've got jobless claims at 8:30, import prices at 8:30, and of course we have that inventory report, which is usually on Wednesdays, but of course because Monday was a holiday, right, it got pushed back for 24 hours. So the Monday holiday pushes the inventories from 10:30 on Wednesday to 11 o'clock on Thursday. As I said earlier on this week on the newsletter, we actually prefer these types of weeks because I would much rather have the inventory report at 11 a.m. tomorrow towards the end of the morning than have it smack right in the middle at 10:30. So looking good on that. So 8:30 tomorrow morning, right, that's going to be, you know, in all reality, the jobless claims report, I don't think any traders take seriously anymore. I think the gig is up. For whatever reason, they've been manipulating this data for a few years now. You won't see any reaction to jobless claims. You'll probably see more of a reaction tomorrow morning to the import-export prices, right, because of the trade balance issues in the U.S., than you will the jobless claims. I don't think any traders really take those jobless claims seriously anymore. The non-farm payroll report you got to take seriously, right, but those jobless claims appear to be completely manipulated data at this point. So 8:30 tomorrow morning, we're probably not going to get too much of a movement of the needle at 8:30 tomorrow. But of course, we'll keep an eye on that tomorrow with you guys here. And of course, the big news here tomorrow for crude traders and for the S&P. The S&P likes to shadow crude these days. Everybody's all wrapped up in the price of oil right now. So S&P likely going to have an impact as well on this tomorrow. That's at 11 a.m. My rule of thumb for inventories is always going to be give it 15 minutes ahead of time. So 10:45 a.m. and then 11:15 a.m. That's going to pretty much be kind of your buffer zone around that news tomorrow morning. So be aware of that. Like I said, it's a good thing it's towards the end of the morning. And then tomorrow afternoon, if you trade in the afternoon session, don't forget you've got the Treasury budget at 2 p.m. Eastern time. And we have a bunch of news tomorrow night as well, which we'll talk about on tomorrow night's newsletter. So really the meat and potatoes tomorrow is going to be that petroleum status report at 11 a.m. Shouldn't have too big of an impact on gold and euro. Crude oil obviously is going to be the big market mover off that. And of course the S&P will typically be the shadow there. So watch out for that tomorrow as well. All right, opening up here with crude. We'll go crude, S&P, gold, and euro. And we have a lot of trading ranges tonight. There's quite a bit of it on the chart. I could give you all these reasons why, but I'd be lying to you if I told you I cared about the why. All I care about is the what and the when and the where and the how, right? The why this is happening really doesn't matter. A couple things about trading ranges. There are some very basic principles that we like to use when it comes to trading ranges. You're going to see me draw trading ranges on the chart, and then you're also going to see me add what I call range expansions, right? These range expansions are ultimately going to be the size of that range, and this may not be drawn to scale, but a 100% range expansion up, a 100% range expansion down, right? And you'll see two of those on both sides of that range. Obviously, this is going to be resistance overhead, right? That'll be the old support day below, right? So resistance above, support below. You'll see those range expansions. Now, oftentimes we're going to see markets consolidate in the middle of these ranges. And a couple things you want to remember about this. First of all, we want to buy low. I want to buy low. I want to sell high. All right, and I want to avoid the middle. Okay, I'll tell you, avoiding the middle is so much easier said than done. What you really want to get is you want to get the market going out of the range and then coming back into the range. Stay away from the middle. So what you're going to see me do is I have these areas marked 33% at the top. And you can flip-flop these, it doesn't really matter, right? 66% at the bottom, and these are going to be kind of the no trade zone of the middle, right? So really focus on buying low, selling high, and don't fiddle with the middle, okay? Now, you'll also see here some examples where we find these trend lines coming down, and you'll see how it kind of creates triangles. Triangles are great. But in all reality, I'm not going to be trading the middle anyways, so I focus on buying the low, selling the high. So you may see some triangles, but when we have a range, the range is going to be the most important factor in this, right? That means buying those lows, selling those highs. Now, the last piece of this puzzle is to focus on failures. Focus on failures. Maybe not the last piece, the second to last piece. Focus on failures. And what I mean by that is that we're going to, for example, if we rotate from the high to the low to the high to the low to the high, we call that range rotation, right? So coming off of the low of this range, we now expect the price to go back to the high of this range, right? Then back to the low. We call that range rotation. So if we're coming off the low, in this kind of illustration here, I'm channeling my Bob Ross. And kids, if you don't know who Bob Ross is, you owe yourself a Google search, right? He is probably the best artist ever, right? And you probably should check him out. I'm sure he has a great YouTube channel, even though unfortunately I believe he is no longer with us anymore. Classic Saturday morning entertainment for at least in my world when I was a kid. So channeling my Bob Ross here. I apologize for the sloppiness to it. But again, we are expecting to see rotation now back to that high. So let's say we go back to the high. Now I want to focus on failures. At the highs, I want to sell the highs, right? And I want to do so on the back of buyers trying to buy the breakout, right? So breakout, buyers try to buy the pullback. I know where their stops are going to be, right? I know where if price goes lower, where those buyers are going to be forced to exit for a loss. And that's where I'm looking to enter that trade short. We go back down to the low now. Sellers, right, get excited. We're breaking out, right? We're going to the moon. They try to sell the pullback, and they might be successful, right? There's no way of telling that ahead of time. But what I will look for, though, is the point at which I know that if price goes higher, that those sellers will be forced to get out for a loss as well, right? That's the key. When I say focus on failures, right? So range rotation, and again, focus on those failures, right? So we want to focus on buyer failures at the highs, seller failures at the lows, and there's one last thing that I want to bring up here, and then I promise we'll jump into some charts here, and that is the pendulum swing, right? The pendulum swing. Let's see if I can spell this one correctly here. The pendulum swing. Now, the pendulum swing is all based on the fact that this trading range is a balanced range, right? How do you think ranges become ranges, right? They don't become ranges because buyers and sellers are trending, right? We're balanced. The buyers agree this is a good price. The sellers agree this is a good price, right? And we're balanced. So think of it as right in the middle, there's that pendulum right in the middle here, right? That's that balance area. If you were a market profile theorist, all of your volume, right, will be piled up right in the middle, right? If you're looking at a volume profile chart, all the volume will be piled up right in the middle, right? It's where price is accepted. It's where business is being conducted, right? All these different ways of describing it. The bottom line is whenever you see a range, the volume is all going to be in the middle. So as this price goes higher, imagine now the pendulum is swinging higher. So buyers take it higher, right? They try to break out, they fail, we crash back down in. Where is the pendulum going to swing? It's going to swing back in the opposite direction. Usually it's about equal to, right, the amount of the swing in one direction. Okay, so that will give you an idea of how far now in the opposite direction we should be expecting, and then start looking for the move right back up. All right, so range rotation, focus on failures, buy low, sell high. Don't you be fiddling with your middle in, right? And of course, use that pendulum swing. Now, when it comes to a breakout, breakouts need to be very, very strong, right? So that's one thing you want to keep in mind for tomorrow is when it comes to a trading range, breakouts have to be very, very strong. Strong enough that they can hold a pullback outside of that range and then get a new higher high or lower low. I'll save those details for our intermediate course here at School of Trade, right? Because that's really the actionable information. So entry triggers and successful breakouts, right? Check out the intermediate and advanced courses here at School of Trade, right? And that will give you all the actionable information. All right. Thanks for your patience there. Now that I got that out of the way, and don't forget, this is on video, so you can always go back to the beginning and watch it again. That way I'm not trying to repeat myself on each of these charts tonight, and we can get you out of here at a reasonable hour here this evening. So, shall we? Crude is bearish and trading inside a range this evening, right around that $50 a barrel area. This tells us to be looking for selling opportunities using traps and failures at resistance levels above the range, and avoid trying to sell the lows of the range unless we see a successful breakout pullback tomorrow. Buyers need to stay patient and wait for either seller failures at the low of the range or a strong breakout pullback that can hold above the reversal line at 50.64. So here's an example. We got a couple of these tonight. They all have some ranges. The euro and crude, though, look very, very similar. They both have what we call a bias. You'll notice this move down. It's obviously a bear move. I would call this a spike in range, right? A spike in range. It's a spike down that immediately now starts to range out, right? Starts to go sideways. So range rotation from the low to the high to the low up to the high, right? And now, of course, you can see kind of how this, right? That trend line can be drawn in there as well. So this is what I was talking about earlier. You're going to find some of these trend lines here. And again, what you really want to focus on, don't worry about so much the trend lines and worry more about the lows, right? And those highs. So as we go to those lows right now we're looking for a rotation back up to that high. This measured move, by the way, now is kaput. After that news came out, let me get rid of that. And we'll add that down. And we'll update that chart for you there, right? Once we got that new lower low, right, that measured move now is gone. It looks like it's now making another measured move. So there's a bear bias in this market. What does that tell me? It tells me that selling is going to be the more reliable trade. Where would I look to be a seller? up at those highs, right? This is where you really want to stay patient for. Now, what would qualify enough for a strong breakout pullback? It would have to be strong enough to get that moving average below, in this case, below that 49.